We begin tonight with some sad news. Jack Bogle, the founder of Vanguard, has passed away. He, of course, was a giant in the investing world. He revolutionized how Americans save for retirement with low-cost, low-fee mutual funds tied to the market indexes. He helped the small investor build wealth and railed against Wall Street's excesses. Tyler Mathisen takes a look at the life of a legend.
Indexing always works best, up, down, or sideways.
In 1975, Jack Bogle started the Vanguard Group, and with it, a new way of investing.
Jack was the creator, effectively, of the index funds.
Index funds, mutual funds whose portfolios match a market barometer like the S&P 500, are commonplace today. But they were unheard of in the 1970s, much less the early 1950s, when Bogle wrote his senior thesis about the concept at Princeton.
I said mutual funds should be operated in the most honest, efficient, and economical way possible. I had a sentence in my thesis that said mutual funds can make no claim to superiority over the market averages.
Bogle's thesis research laid the groundwork for what would become one of the most powerful investing movements of the late 20th century. He concluded that active trading mutual fund managers failed as a group to outperform the relevant indexes, especially when you subtract fees and expenses.
Anybody can do it for a year, and a few can do it for 5 years, and a few can do it for 10 years. But over an investment lifetime, there's about a 3% chance that a money manager can beat the market.
After Princeton, Bogle went to work for Wellington Management for over 2 decades, eventually becoming CEO. He was later terminated for what he called an unwise merger. So he started over, putting the indexing concepts from his thesis into practice at Vanguard.
Investors suddenly found the playing field more level. So to a certain extent, in fact, to a great extent, I would say, he democratized investing for individuals, which was a huge contribution in the mutual fund space.
That initial fund, called the First Index Investment Trust and later renamed the Vanguard 500 Index, tracked the S&P 500. Skeptics ridiculed it as Bogle's folly. But by 1990, index investing had taken root. The reason? Bogle turned out to be right. In the 15 years ending in January 2017, 9 out of 10 actively managed large-cap mutual funds underperformed Vanguard's 500 index. Today, Vanguard has more than $5 trillion under management.
Jack Bogle is pretty much like a T-Rex in terms of what Vanguard is versus, a little tiny lizard over here. You don't see too many folks anywhere in the world that manage that much money.
After retiring from Vanguard in 1999, Bogle started a research center on the Vanguard campus. There, he continued advocating for indexing and buy and hold long-term investing. He called trading stocks a loser's game.
It comes right out of Shakespeare. These moves in the market are like a tale told by an idiot, full of sound and fury, signifying nothing. I think it's speculators speculating on what other speculators are speculating on.
And speaking of speculation, few would have bet on Vanguard back in 1975. Even fewer still would have thought Bogle would still be jousting with critics deep into the second decade of the 21st century. He had his first heart attack at age 31. Doctors said he wouldn't make it to 40, much less live to 89. He had 5 more heart attacks before undergoing a heart transplant at the age of 65.
I may be, I don't want to get carried away here, the luckiest guy in the world.